Joining us now is Carrie Firestone, Chairman and CEO of Aureus Asset Management, CNBC contributor. She's been snapping up some of these beaten down tech names. It's been a good call, Carrie, but we talked about that 5-30-year inversion. Does that worry you?
Yeah, well, you know, Brian, this has been a very unusual couple of years. And we had the NASDAQ drop 23%, the S&P drop 13%. So I feel as if certain rules, we just sort of throw them out and adjust to what we're seeing in front of us, which is some cheap stocks that have been decimated. We saw mutual funds, hedge funds, institutional investors, individual investors just sort of discard everything that they had bought over the last couple of years until they're trading at a point where some of them sell at multiples we haven't seen in a decade. You know, if I look at PayPal example, I understand stock was overvalued. It was trading at more than 50 times earnings. Now it's 17 times next year's earnings. Stocks like Fidelity National, Adobe, O'Reilly Auto, Twilio. Now that company doesn't earn anything, but it has a phenomenal potential market for communications that are digital, from your airline, from a train station, from your hair salon, from a restaurant. You get notifications. So I think that we have to consider what the prices are today and what seems attractive to us.
Well, Carrie, I guess prices and valuations are the only thing that did change because, you know, Adobe and PayPal, they didn't drop because of the war in Ukraine, a war we all want to be over yesterday. We understand that, but they have nothing to do with that conflict. They may have a slight bit to do with inflation, but more importantly, it's just about the Federal Reserve raising rates, which naturally brings down the valuations of these high-value tech companies. I'm trying to understand what has changed in the sentiment in like 2 weeks.
Yeah, well, 2 weeks ago, we got to what I would call capitulation in some names. All you could hear on CNBC or other networks that talked about the market is that the sky is falling and things are going to just keep cratering. It was similar to what was going on in March of 2020 before we realized how bad COVID was going to be, but the market had fallen 37%, and everyone said it's never going to turn around for a long time. And this was not the same, obviously, but you know, market drops that substantially. Then you have to look at what's littered around you. What can we pick up that's been discarded and say, gee, you know, a company like PayPal, this has an enormous marketplace. Venmo, whoever Venmo'd before, and now everybody, tens of millions of people do. And you recognize that a war, yes, has just monumental effects on humanitarian, social, and the economies of Ukraine and Russia. But those relative to the world are not significant enough to justify 60–70% drops in stock prices. And that's what we saw. And that's what investors need to do. Look at the price, look at what the earnings potential is, and make their decisions.
Fair enough. And I also, Carrie, blame the media, dag nabbit. But am I to understand that you are not a lover of oil and gas stocks anymore, or at least right now, because everybody else sure seems to be?
Yeah, well, I think that a lot of money has been made in energy, and that's been a great place to be. But if you looked today, and that's what you have to do every day, and say, would I buy these stocks today with new cash? And I think the answer is more no than yes. They were up 50% last year. They're up tremendously this year. Some stocks have doubled this year in the energy sector. And you know, are things going to continue to get better? Is oil going to go to $200 a barrel? I mean, it has been now trading back and forth for the last few weeks. It's not a straight line up. Yes, you just made the point that there's more demand for energy, but the stocks have reflected it. This is a discounting mechanism that we all deal with, and a lot reflects in the price based on what we see over the next 6 months. So no, we wouldn't be buying them here today.
Well, the idea basically is to buy lower and sell higher, and that's why you're picking up maybe some stocks like an Adobe, like a PayPal, maybe like a Fiserv as well, and the oil and gas side too. I mean, everybody seems to love them. Carrie, what's the next most important piece of economic data you're going to be looking at? Because we got two tales. Consumer confidence is out today. It's the real first number we're going to see with high inflation.
Yeah, well, I would think that confidence has probably come down some, both because of inflation and the war in Ukraine. Mortgage rates are up. But in an environment of a lot of change, which is what we're seeing, you can have confidence run very, very high. And that, I think, wasn't a good sign. So I think inflation, and then we're going to see earnings. And over the next few weeks, we're going to start to see what companies say for the next quarter or two.